your roadmap to the latest in auto. Welcome to Highway Herald. In April 2025, the U.S. economy slammed into a major disruption when President Trump's administration imposed a 145% tariff on Chinese imports. The fallout was immediate. $14 billion in cargo vanished overnight, and once busy ports like Los Angeles became ghost towns. Retailers are scrambling with shrinking inventories, and store shelves are beginning to show it. As America braces for ripple effects across trade, industry, and consumers, here's a breakdown of the key developments fueling this economic standoff. Port shutdowns, America's trade engine stalls. The Port of Los Angeles, America's busiest gateway for Chinese imports, has hit the brakes hard. Following the abrupt 145% tariff announcement, Executive Director Gene Soroka projected a staggering 35% drop in cargo volume compared to 2024. Retailers froze orders, and now cranes sit idle as the docks go quiet. Major shippers like Maersk and Hapag-Lloyd have canceled dozens of sailings or rerouted empty vessels. In April alone, over 80 West Coast sailings were scrapped. Containers are stranded overseas, highlighting the vulnerability of just-in-time logistics. Even more diversified ports along the Gulf and East Coasts aren't immune. Customs backlogs and off-course cargo are jamming distribution hubs. The Northwest Seaport Alliance is seeing lighter loads, down as much as 30%. This isn't a temporary slowdown, it's a full-blown trade reset. With nearly half of LA's cargo tied to China, the effects ripple far beyond the docks, reshaping the very infrastructure of U.S. commerce. And what's missing from ports is now hitting retail floors. Let's shift gears to the shelves. Inventory crunch. Retailers race against the clock. America's retailers are bracing for impact as tariffs choke the flow of Chinese goods. Giants like Walmart and Target are already seeing major disruptions, with the National Retail Federation forecasting a 20% drop in import volume for late 2025. With shipments frozen, inventories are vanishing fast. Most big-box chains have just 5 to 7 weeks of stock left. Consumers won't face empty shelves just yet, but expect fewer choices and rising prices. Smaller businesses are at higher risk. Jay Foreman, CEO of Basic Fun, warns that missing holiday shipping windows could turn seasonal inventory into dead stock overnight. Inventory planning has become a gamble. Retailers are juggling shifting costs, supplier uncertainties, and tighter margins. Some are exploring new sourcing, but mid-season pivots are tough to pull off. The result? Less variety, especially in apparel, electronics, and home goods. If the tariff standoff lingers into summer, this supply strain could become a full-blown retail crisis. Before we delve deeper, take a moment to subscribe to Highway Herald. Your support helps us keep bringing you the most important updates from the world of vehicles and trade. Now, let's move from the shelves to the supply chain lifelines that feed them. Economic engines sputtering. The $14 billion cargo freeze and sweeping tariffs are now rippling through the entire U.S. economy. In Q1 2025, GDP slipped 0.3%, the first decline since 2020, signaling trouble ahead. Transportation has taken a direct hit. With import volumes down, trucking routes and rail freight lanes are stalling. Logistics firms are cutting hours, parking trucks, and furloughing workers. If this drag continues into June, job losses could spread into warehousing and retail. Manufacturing isn't spared either. Automakers relying on Chinese electronics and components are seeing cost hikes, feeding into durable goods inflation. Consumers will soon feel it in sticker prices. Worse, uncertainty is halting momentum. Businesses are freezing projects, shelving hiring, and tightening capital budgets. Confidence is fading, and the investment engine is sputtering. Even if tariffs vanish tomorrow, the recovery won't be instant. For now, the U.S. economy is balancing on a razor's edge, with no safety net in sight. So what's the plan? Many companies are looking elsewhere. Let's take a closer look at those backup routes. New routes, new risks. The struggle to diversify supply chains. With Chinese imports stalled, U.S. companies are racing to diversify, but replacing China is no small feat. Southeast Asian countries like Vietnam, Thailand, and Indonesia are stepping up, yet they're struggling to scale fast enough. Vietnam's factories are overwhelmed, ports are congested, and labor shortages are mounting. Thailand is grappling with delays and spotty quality control. Unlike China's refined logistics system, these regions are still building capacity. The shift isn't quick. Retooling supply chains takes 12 to 24 months, and costs rise with every new obstacle. Customs headaches, pricier freight, and tight shipping availability. Some tech and auto firms are considering reshoring, bringing production stateside, but that comes with steep labor and compliance costs. Only high-margin or automated sectors can realistically absorb the hit. For companies relying on just-in-time delivery, even minor delays are dangerous. Diversification brings resilience, but it's a long-term move with short-term pain. Right now, firms must weigh China dependence against the realities of untested alternatives. As companies weigh new paths forward, the broader trade landscape is shifting beneath their tires. Crosswinds ahead, trade, trust, and a shifting global map. As summer approaches, there's no clear off-ramp in sight. Despite Treasury Secretary Scott Bessent's warning that the tariffs are unsustainable, no progress has been made toward de-escalation. China's response remains muted, perhaps strategic, perhaps just waiting to see if U.S. industries cry uncle first. Economists are now sounding the alarm on structural volatility. Retailers and manufacturers can't plan, can't invest, and can't predict. Some are hedging with two separate strategies, one for continued tariffs, one for rollback. Both cost money and both stall growth. Meanwhile, the impacts are trickling down. Consumers are seeing shrinking selections and slow rising prices in electronics, home goods, and clothing. The coming back-to-school season could feel leaner than usual. And don't be surprised if holiday shopping starts earlier, with fewer options on the shelves. The labor market is wobbling too. Warehouse hours are being cut. Retail chains are pausing new hires. And if port activity stays frozen through Q2, expect more furloughs and potential layoffs across the logistics chain. But the most dangerous impact may be geopolitical. Allies are watching. If the US is seen as unpredictable on trade, nations could reroute loyalty towards steadier hands, like the EU or emerging Asia-Pacific coalitions. In a post-COVID world already primed for decentralization, this trade war might be the final push companies need to never look back toward China, or even the US. Global trade is fragmenting, and if diplomacy doesn't step in fast, we're not just losing shipments. We're redefining the very framework of international commerce. And that brings us to the final turn in the road. What comes next? Verdict: holding the line or rewriting the rules? What started as a $14 billion cargo freeze is fast becoming a stress test for America's economic engine. From parking lot empty ports to risk-averse boardrooms, from price-conscious shoppers to sidelined factory workers, this tariff war is reshaping the entire supply chain ecosystem. But within the crisis lies a choice. Can American industries scale new supply routes in time? Is reshoring just campaign speak or the beginning of something real? And will our leaders prioritize long-term economic strategy over short-term political sparring? The road ahead is uncertain, but it's one we'll all be driving on. What do you think, gearheads? Should the US stick to its tariff guns or steer toward compromise? Do you believe supply chains can adapt fast enough without China? Would you support higher prices if it meant more domestic production? Drop your thoughts in the comments. We want to hear your experiences and predictions. And before you go, make sure to subscribe to Highway Herald so you never miss the next big shift in the auto world. From trade to tech, from factory floor to freeway, we've got the road covered. Thanks for riding with us and see you next time. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.